What's going on, YouTube? In this video, we're going to talk about ARM Holdings, ticker symbol ARM. So this is one of the newest IPOs. I believe it IPO'd on the 14th, which would have been on Thursday. So the big question is, what's this stock potentially worth? Should you buy ARM Holdings? Is it worth $100 or is it worth $10? We're gonna kind of dig into that and find out potentially what ARM Holdings is really kind of valued at. So a couple of quick key points as to what ARM does. If you don't know, they're somewhat involved in the automotive innovation era, where they do driver assistance systems, autonomous vehicles, digital cockpit. You can read vehicle motion dynamics, and they make chips. They make all different parts of those sectors within the automotive area. They also do cloud edge infrastructure for apparently a trillion devices. And on top of that, they also make CPUs for phones, which is probably what your phone has in it, is an ARM product CPU. So, I mean, that's a real brief look as to what they're involved in. Obviously, it's worth more research on that to understand better of what they do if that's something that interests you. Let's take a quick peek at their overall financials here. So, we've only got about, 3.5 years worth of data here to kind of base off what this company is, how it's doing versus in terms of revenue and income and cash flows. So back to March 21st, and this is trailing 12 months. We went from 1.8 up to 2.5, 2.5, 2.5. Okay, this is gross profit. We should actually go to total revs here. 2.7, 2.6, 2.6, right? Same difference. It really appears to be flat, right? We had $700 million increase, and then it's just been stagnant right there for the last 3 years. Not really much growth. Scroll down a little further, we can see our net income here. We went 388, 549, 524, 404. So our net income is going the wrong way, even though our revenues are, not fantastic, but it's not crumbling. You're talking $17 million difference, and from here to there, less, about 40 million, $41 million difference, and we're net income is down $120 million, right? So our net income is shrinking, but let's take a peek at the balance sheet. So our total assets, similar story here. They're flat, right? Our total current assets, again, it's very similar to the revenues here. We had an initial pop in growth, and then it's just kind of hanging out here. It's not pushing up any higher or any lower, really. Total liabilities, total current liabilities going a good direction. They're shrinking. That's good. Our total liabilities are also shrinking, so that's good. And then we'll take a look at the cash flows now and see what our cash flows are doing. So you see our net incomes come over to cash flows here. And our cash from operations is 1.2 down to 4, back up to 7, back up to 8. So we're heading somewhat in the right direction there in terms of cash for operations. Not at a very quick clip though. And then our CapEx here is stable, so that's good. So they are a free cash flow positive company, so that's a good thing. And it looks like our cash flows overall, even though this was a like if we disregard this, we can see, our CapEx is growing, but our cash from operations is also growing too. So, that's good to see. So let's take a look at some ratios here real quick. So right here we can see a return on invested capital of 27%. That's a solid number. So company statistics here, next page. We have a market cap which is sitting at $65 billion. We got return on equity of 13.8%. We have return on invested capital, which we just saw at 27%. Our gross margin is 96%, operating margin 25, profit margin 20. So in terms of margins there, those are all solid numbers. Operating cash flow. So this is one thing. So we have free cash flow of $675 million, and our net income is 524 million. So it's good to see that our free cash flow is higher than net income. We do not have any price targets yet on analysts. So overall, so far on the financial side of things, what we're seeing is just no growth, right? I mean, it appears to be no growth at the moment. It good financials, right? There's nothing wrong. There's no insane amount of debt, no crazy amount of cash, no insane amount of free cash flow. It's just pretty normal. I mean, I wouldn't say normal, but I guess it's good, right? It's good. So, since we don't have any real data on this company yet, a lot of analysts have not put out any sort of numbers, any forecasted on these numbers yet. So what I did is we know our EPS is about 0.39. So I put that in. EPS growth, I put 10%, and revenue growth, I put 10%. And also our PE ratio right now is sitting at about 156. So that gives us a Peter Lynch fair value of 3.9%. 10% might be high, 10% might be low. Really, we don't exactly know because of the minimal amount of data that we have. So multiples, I came up with IBM, QCOM, and TSM. I believe those are relatively fair to compare to ARM with. And that gives us a price tag of $13 a share. So we have a market cap of $62 billion, cash equivalents, 2 billion, debt, 3.4, cash from operations, 856 million per year, and gives us a multiple of 74 years to earn our current market cap. Our PEG ratio sitting at 15.58. So that's price to earnings, the PE, divided by growth of 10. Intrinsic value on Graham's valuation here, 9.8 or $9.88, and I put a 2 in, which tells us it's a stable company. So, if I was to put a 1 or a 0 in, it's going to shrink that number even more. So 2, I gave it as a stable, mature company, which it probably is somewhat, right? But a stable, mature company is something like Coca-Cola, right? Or a Walmart or something like that, not somewhat of what should appear to be a growth company that's going to be innovating into, the AI hype potentially, right? DCF. So this is another one. I put a weighted average cost of capital of 8% in, 2.5% perpetual growth rate, and I put a free cash flow growth rate of 8.5%. I mean, we can see here our free cash flow, 838 down to 39, back up to 391, up to 414. So I'm kind of basing it off these two numbers really, because these ones aren't correct, right? So, well, not correct, but they don't help us figure out what this company is really doing in terms of growth for free cash flow. So I said, you know what, let's give them 8.5%, and it gives us an idea, right? So it gives us a DCF price per share of $8. So rule 72, EPS 0.49. That one auto populated from Yahoo, I believe. So that would be what we have here, but it's not going to matter that much. So a little bit different, but 0.49, current PE of 156. I put a 10% growth rate in. So I put 10% here. 10 goes into 72, 7.2 times. 7.2 goes into 10 years, 1.38 times. So our future EPS will be doubled once and then about, 0.38 times of a second time. So I gave them a 1.15 in terms of future EPS. Gives us a fair value of $5.75. Purchase price of $4.30. That's with 30% margin of safety. Overall, between every valuation that we gave it, it gave us an $8.19 valuation with a 30% margin safety of $5.73. Every single valuation is telling us that, it's not like one was 100, one was 200, one was negative. We've got our PEG ratio at 15.5. Manual PEG is 7.4. Years of valuation, 74 years. I mean, there's nothing here to say, holy cow, this is a smoking deal right now. And on top of it, if you look at news articles on this, on what analysts are saying about this company, is every single one of them are saying this is way overpriced. Like every one of them. So that brings me to the next thing. We're going to look at this article real quick. So valuation. So SoftBank took ARM private for $32 billion in 2016. Okay. So, 7 years ago. 4 years later, NVIDIA offered to buy ARM in a stock and cash deal that was worth around $40 billion at the time. So 4 years later, this company is now worth to NVIDIA $40 billion, right? Obviously, with Nvidia's hype, it's could have been an $80 billion deal, but that's irrelevant in terms because at that point in time, Nvidia was only worth X number of dollars, right? Whenever they offered that deal to them. So in its latest earnings for June quarter, SoftBank valued ARM at $45 billion, okay? So 2 months later, it bought back 25% stake in ARM that had been owned by SoftBank's investment vehicle, the Vision Fund, at a $64 billion valuation. At the IPO, SoftBank achieved a 54.5 billion, which rose to almost 65 billion after its first day of public trading. So you're telling me on a company here, granted, we can't see what the financials were back in 2016, right? If we knew what these financials looked like in 2016, we might be able to tell if a better understanding if this company really doubled in value in the last 7 years. It's not like this company just came out of the woodwork and is growing like crazy like in Enphase or another growth company, right? ARM's been around for a while. So ARM's been around since 1990. So this company is, 33, 34 years old. It's not a new company. It's been around for many, many years, right? And so it's hard for me to believe that this company in 7 years went from a price tag of 32 billion to double it in 7 years' time on a company that we can very easily see the financials of how this is significantly overvalued. And also, typically, when companies such as Nvidia is going to buy this stock or buy this company, they usually don't underpay for this company, right? They're going to overpay for it. Typically, is the case. They overpay. So, you know, 3 years ago, Nvidia was going to pay $40 billion, and right now it's trading at $65 billion. And again, Nvidia probably was accepting to overpay for this company by, maybe $5 to $10 billion. We don't, I guess I don't really know, but it kind of gives you an understanding of how overpriced this company really is, especially based on the valuations we gave it, and just all the other analysts are saying how overpriced this company is. So basically, long story short, my opinion, ARM is extremely overvalued. I would stay away from it for until it reaches $5 a share, unless financials start turning around on this company and they start showing 30-40% growth rates, which obviously is not the case right now. So yeah, so that's my take on ARM. If you found value in this video, drop a like, subscribe, and we will be back later with another stock analysis video.